Good weekend. Ira Epstein with your agriculture wrap-up, your weekend edition for this Friday, October 4th, 2019. I think this is going to be an important weekend. And the reason I do is I think the farmers in the areas that, though, have normally great soybean planting, but were waterlogged throughout that early May, June period that got very late, are going into the fields and they're looking to see what those crops might look like as they're getting ready for harvest, but they're not harvesting yet. We already saw today Vantage come out with a reduction in their estimates, and I think they came out and dropped about a bushel and a half in the soybeans from 48 and a fraction to 46 and a fraction. Okay, you start getting down into the lower 40s from there, you change the game a little bit, and I think this is an important week. As you know, this coming week we're going to get the USDA numbers, and they're going to come out and give us an idea what to expect, and the market is going to rock and roll on that. The question is, to me, and I wrote about that in my commentary report for my subscribers, the report that is done by the governments as of the end of September, October 1st. We're at the 4th and it's not far away. Does it take some of that into account or does it miss some of that? Because I think this weekend's a very, very important weekend for late planted soybeans and getting some ideas. When we look at the monthly area chart of closes, the one thing that stands out is for a very long period of time we stayed over, and you can see this, under is the right word, this 18-month moving average of closes. Just last month, the end of September, we were able to close over that number. Now, we're only at the 4th of October, so don't think that this has to stay up. This could have been a fluke where it puts its head down. However, you start adding to that, and the question is, do you act like this, or do you start launching from here more of a rally? That's what I don't know. When I look at the weekly bar chart, and remember I said we're looking at weeks, you're right in this key resistance area. This is a real important zone. I want you to imagine I'm helping you draw. I want you to think of somebody, we're hanging them by up their legs upside down. That's a head. A shoulder could be another shoulder over here. It's called an inverted head and shoulder. If you break out through these numbers, I predict you're going to hear people say you have an inverted head and shoulder formation. And what they'll do, just so you understand, they'll look at this high to this low, and they'll say, what is the difference between there to there? And if we grab the bottom of that head and flipped it over, where might this market go in the long term? That is one of the theories, be it of a head and shoulder when it breaks to the downside, or if you flip it over to the upside. It's in our futures trading kit on our website, so you might want to take a look at that. In the meantime, the trend is up is defined by the idea of the swing line. Now, what a swing line does is it looks at the previous week, and for the current week that it's in, or the current day, depends if it's a daily chart or weekly chart, it looks to see, did you have a higher high week? Did you have a lower low week? Did you have an inside week? Did you end up with an outside week up or an outside week down? There's 5 variables. And according to those, I created the indicator, so I know how it works here. You've got a pattern of higher lows, higher highs. That is the definition of an uptrend. To break that uptrend pattern, you have to take out 881 and a half. Here you are at 916 and a quarter. So that is what I define as the risk to the trend. Next, I look and filter, where's the 18-week average of closes? It's under that number. So to get to that number, if the market falls back, you'd be breaking the trend. It's not something I'd want to see. Where's the resistance that you see on the chart? I want you to look at this 100-week moving average of closes. Look back here. When you cracked that finally and stayed under it, you haven't come back since June. Not this June, a year ago June. Now you're back up testing a resistance point. There's another point I look at on a chart called a Bollinger Band. These two numbers have come together. This is called a resistance area. Doesn't mean it's going to hold or not. I think the first challenge of it is where pros take money off the table. No, they're not jumping in and saying it's going higher. I think that that's often where pros come out of markets. They'll come out of them as you hit that. That doesn't mean that they'll come back in at another point. It doesn't mean the trend isn't up. It is up. But there's a resistance point that I'm seeing there, and I'm seeing momentum up. So I've got a market that's in an uptrend. It's come up to 2 resistance points. It's in a resistance zone with bias to the upside. In the meal market, we have a market that had not had upside momentum. It had flattened itself out, and now it turned up down here. That upward momentum has carried the market back to the 18-week average. The settlement was 298.80 today. Therefore, it's under the 18-week average. This is your resistance point here. Now, should this market decide to launch to the upside, we have 322.80 to 323.20 points, the 100-week average in the upper Bollinger Band, but you're at a resistance point right now. In the soy oil, you're also at a resistance point. So let me explain the difference of this one. Here you've got the resistance here and the market goes up to it. I realize the first time you hit resistance, be it on the upside or you hit support on the down, everybody here is getting super bearish, everybody's getting super bullish. It's the wrong thing to do typically. That does not mean markets can't break out of patterns, but that's not as narrow a pattern as I typically like. If the market pulls back and gets under here, support, I'd look for possibly, the word is possibly, the closest moving average, key average, and in this case would be the 18-week average. Market starts down, doesn't quite hit it, it's back to the resistance point. So it made its run back there, but in the process it's kept higher lows, higher highs. We are at a resistance point, so somewhere between here and that last high is a logical spot to look for this market to have problems. Doesn't mean the trend is over to the upside. Momentum is up, bias is up, but you've got some resistance, that's all. In the corn market, we're lifting from a market that's had a long pattern, peaked out here in the 460 area, fell back down, as you can see, into the 340 zone, and is climbing up into a key area here. Now, it stalled itself at the 100-week average. It paid no attention to that on the way down. Here's your break. You didn't come back to it. You kept breaking. Often, if you slice through a key average on the way, the reverse way, it has some importance. Just go in and do your charts. You'll see what I'm getting at. Now, if the market launches further, the first resistance, 399, and to negate the downtrend on this pattern, you have to get over this 417 level. Therefore, the market is still bearish, but you're getting this sizable bounce in the market. In the wheat market, you're stuck at that line in the sand. This 497 level is very, very important. That is the 18-week average. You got up to it and you stalled at it. And as I said, on the way down, that's often support. On the way up, it's often resistance. And you got 2 points here that you're fighting, the 100-week average and the 18. Yes, the trend is defined by the swing line is up. Yes, momentum is up as measured by the Bollinger Band, but no, you've got bias to the downside because you're failing at that number. In the cocoa market, you're still bullish. The market has higher lows, higher highs. It's in a run. Where would you think on pullback support might show up? Well, I'm going to guess first the 18-week average of closes, and possibly, if that gives up, the 100-week. Should the market rally further, maybe the upper Bollinger Band. Momentum up, bias up, trend up in the market. Sugar into a resistance zone. You're in between the 100-week average and that upper Bollinger Band. It hasn't hit that band yet. That number's 1301. You hit 1293. Close is nice, and you're pretty near it, but it could hit that, and I'd look for resistance on that first challenge of that market. On the way down, some support at the 100-week average down to the 18. Are we trending? No. You have that lower low, higher high. You got an upthrust, as I call it. Coffee. You had this big move, pull back, and you're sort of just playing it around sideways here. Cotton. You're still under the 18-week average. The bias is down. You've got a contra-trend move because the swing line is up. I'm looking for resistance at the 18-week average. Close over that, and the bias will change. However, I still think you have limited upside because the Bollinger Band is slipping, and it's going to fall again next week, looking at how this market's angle is and what the math of it will do. Then the slow stochastic momentum gradually getting out of a market condition where it's pointing up but not running to the upside. In the cattle market, battleground 18-week average. Now, here's what's going on. You have stayed since all the way up here back in May when you peaked out in this 130 zone. You finally got down. You got down once to the Bollinger Bands here. You never paid attention to this 100-week average. You bounced, went sideways, and then continued down. You haven't even made it at that point back to the 18-week. You're just getting there. So I'm going to look for resistance that starts showing up between here and these levels. Are we in a trend? No. We're in a thrust to the upside. The market's come straight up from $93 to 104 to 107.35 without even having a lower week in between. So I think the shorts got run out of town, but they've had a heck of a run, and now the market trying to figure out what the new trend is. In the hog market, why second guess yourself as to what China may or may not do come the trade talks on Monday? We know that China released licenses 2 weeks ago for more soybean purchases, and the Chinese have pretty well bought the amount that those licenses called for. What we have not seen, where's the hog purchases that we think they need, the meat? Haven't done it. Doesn't mean anything yet. It's still, this was Golden Week. Now we start getting to the interesting time. The holiday's over, the 70th anniversary coming to the end of the week of the party for the Communist Party. Everybody comes back to work next week in China. If you break through these numbers, this 100-week average, then you get to the 18. Do you want to play that you get those purchases or not? That's what you have in that market. I'll answer a bunch of these questions during the week in my morning subscriber video. At 6 in the morning, I start recording a video that I'm not physically in. At home, I've already gotten up, I've read what's going on in Europe, Asia, what's impacting the markets, weathers, if the Chinese are here, what's going on with that, and I start throwing out trade ideas with specific buy and sells. This is generalized, the one that I do here. I'm going to typically cover 40 charts and then 5 on the ETFs, and the charts will look just like this. The beauty is there's going to be a slide bar on the bottom, and you move through it, and it's going to give you each sector that I'm covering. So let's assume that you're a trader that just wants soybeans. Go to the grain sector. You don't need to watch the S&Ps and the others. You're going to be able to just go to that sector to see what I'm talking about and what I'm thinking. I cover everything in this sequence all the time, so as you pull, these areas will light up. Just let go of the cursor, away you go, and there'll be on the side a lexicon you can click. I charge for it. I'm not getting up at that hour to do this for free. It's not expensive. For the first 30 days, $7.95, no contract. You want to quit right away, you can. You get your 30 days, you're done. You want to keep going after that, it's $15 every 30 days. So it's not on a calendar month, it's per 30 days. And you'll even see when you're on our website, should you decide to do this, you can buy 1 year at a time. And instead of $15 every 30 days you pay up front, it's $13 per 30 days, but you pay it all up front. How do you find out? Because we have a whole fact sheet on it. Go to www.iraepstein.com. If you go to the research, there'll be a pull-down menu. Click Ira's Morning Subscriber. It'll tell you all about it, and you sign up right there. You can get there if you click on this icon if you're watching me on YouTube. I'm Ira Epstein. You all have a great day, and I'll see you Monday.